Click the bell icon to get latest videos from Ekeeda.
Hello friends, myself Professor Uday Bhokare and now I am welcoming you on your own YouTube channel Ekeeda. Hope you are watching my videos and you are finding it interesting. Keep watching, keep sharing with your friend. But yes, if you are watching this video first time, I request you, please subscribe to our channel Ekeeda and also press bell icon for your latest notifications. Friends, today we are going to discuss about CA Intercourse profit prior to incorporation from accountancy topic. And question number 4 we are going to learn now. Let's see question number 4. They have given you a ready-made P&L account, but let me read the paragraph also. ABC Limited took over the running business with effect from 1st April 2000x1. So I can say it is our takeover date. Company was incorporated on 1st August 2000x1, so it is our incorporation date. And following summarized profit and loss account has been prepared for the year ended 31st March 2000x2. These 3 dates will help us to find out time ratio. They gave you various figures. Let us try to discuss, if nothing is given, what can be done, right? So gross profit, we know that sales ratio, salaries, time, stationery, time, traveling expenses will be on sales basis, advertisement sales, miscellaneous trade expenses we will see. If nothing is given, it is a business expense, so it will be on sales ratio. Rent of the office building, time, electricity charges, time, director fees will take to the post, bad debts will take on the sales ratio, commission to selling agent sales ratio, tax audit fees will be allocated on sales ratio, debenture interest will be taken directly to post, interest paid to vendor we will do the working note, selling expenses we will allocate on sales basis, depreciation on fixed asset time basis, net profit will work out as a difference. Total sales for the year, which amounted to rupees 19,20,000, arose evenly up to the date of 30th September x2. That means monthly sales were constant. Thereafter, they recorded increase of 2/3 during the rest of the year. This will help you to work out sales ratio. Rent of the office building was paid 2,000 per month up to September 2000x1. Thereafter, it increased by rupees 400 per month. So for rent, we will have a working note. Traveling expenses include 4,800 towards sales promotion. That means remaining traveling expenses will be fixed nature. So we will definitely look at it separately. So we'll have some working for that also. Depreciation includes 600 for the assets acquired in the post incorporation period. So 600 will be specifically taken to the post, and remaining depreciation we will allocate on the time basis. So for depreciation also we'll have some small workings. Purchase consideration was discharged by the company on 30th September x1. That means interest on PC will be calculated based on this date. By issuing equity shares of 10 each, it has nothing to do with your P&L account. Prepare a statement showing calculation of profit and allocation of expenses between pre and post incorporation period. So we'll note down this. So students, I am ready with my format. Format heading is statement showing calculation of profit and loss, profit and allocation of expenses between pre and post incorporation period as they needed. Now before you proceed, as I always say, you need to work out 2 basic working notes, that is for time ratio and sales ratio. We'll have that working. To find out time ratio, I need 3 dates: takeover date, incorporation date, account closing date. Let's write it from the question. Here they gave you business is taken with effect from 1st April x1, incorporation took place on 1st August x1, and year ending was 31st March 2000 x2. So we'll write those dates. Pre-incorporation period will be from April to August, April, May, June, July and August. April, May, June and July, not August, because August incorporation done. Okay, so 4 months. And in post, of course, there are 8 months. So what is our time ratio, students? time ratio will be 1:2. Total sales for the year they are mentioning 19,20,000 arose evenly up to 30th September X1. Thereafter recorded an increase of 2/3 during the rest of the period. Okay, so what I am doing, I am doing that basic assumption and then we will work out. Let monthly sales up to 30th September X1 be rupees 1. It increased by 2/3 after that date. So from 1st October X1 onward, monthly sales will be 1 plus it increased by 2/3. Thereafter they recorded an increase of 2/3 during the rest of the year, right? So I can say it is 1 plus 1 ka 2/3. It increased by 2/3. So if I write correctly, 1 plus 2 upon 3. If I solve it further, it will be, see, it is something like this, 1 upon 1. Cross multiplication, I can say 3 plus 2 upon 3. So my sales will be 5 upon 3 rupees per month. So be careful. I am making denominator same. So 3 multiplied by 1 and here 1 multiplied by 2. So in this way I will work out. So my sales per month will be 5 upon 3 from this date. So I need to work out sales for the respective period. So pre-incorporation sales first April to 31st of July, April, May, June, July, 4 months. Rupees 1 multiplied by 4 months. Rupees 4. Post incorporation sale from 1st August X1 to 31st March X2. See, my sales remain constant up to 30th September. So August and September my monthly sale will be 1 rupees only. So August and September it is rupees 2. But from 1st October, that is October onward up to 31st March comes to 6 months. So in those 6 months my sale will be 5 upon 3 rupees per month. So I can say October to March it is rupees 5 upon 3 multiplied by 6 months. It will be rupees 10. So what will be my total? 12 in post. In pre-incorporation it was 4. So I can say therefore sales ratio will be 4:12. If I minimize it is 1:3. In this way I calculated my sales ratio. Besides that various other calculations we will do. Right, so now I am moving for my main answer. Our gross profit is given 3,20,000. It is allocated on which basis? It is allocated on sales basis. What is our sales ratio? 1:3. So our gross profit is allocated in sales ratio which is 1:3. Okay. B part. Expenses I need to allocate now. For that, I will firstly go with my workings and then I will go with the rest of the items. Information number one we have used for calculating the sales ratio. Second information is about the rents. So we'll do the allocation of rent. What is total rent they gave you? 26,400. Now I will think about how to allocate. Information mentioned that rent for office building was paid at rupees 2000 per month up to September 2000 X1. Up to September. And thereafter it increased rupees 400 per month, means it became 2400 per month. So let us allocate. Pre-incorporation and post-incorporation. Pre-incorporation is a period from 1st April to 31st July X1. They mentioned your rent was 2000 per month up to September. That means obviously up to July it was 2000 per month. $8,000. Thereafter up to September it was 2000 per month, and thereafter it increased by 400. So we will see that 1st August X1 to 31st March X2. So August and September the rent must be 2000 into 2, that is equal to 4000. October to March. October to March it increased by 400. It will be 2400 for rest of the 6 months. Total post incorporation rent 18,400 and pre incorporation 8,000. One shortcut top secret between you and me. If you have derived 8,000 for pre-incorporation, goes without saying remaining rent will be for post-incorporation. So working will carry the weightage. Therefore, I am showing the working. But shortcut is very clear because they prepared a P&L account and they gave you the P&L account. So goes without saying, if you find one figure, second could be a balancing figure. No need to calculate. But to get the marks, I need to write. Okay. So I have written my rent allocation. So I am writing in my main answer. It is 8,000 and 18,400. Next, traveling expenses include 4,800 towards sales promotion. That means remaining will be other traveling expenses. Other traveling expenses we will allocate on time ratio. So we will prepare one more working note, allocation of traveling expenses. So traveling expenses include 4,800 towards sales promotion. That means your other amount will be 12,000. For sales promotion, it will be allocated on sales ratio. It will be allocated in the ratio 1:3. And for other, it can be taken on time ratio, assuming it is fixed cost. So traveling expenses for sales promotion and traveling expenses for others. So we have to be very careful. We have to be very careful. Wordings are traveling expense only. So we are assuming traveling expenses for sales promotion and others. For other, we are assuming it is fixed cost. Okay, so what is your total pre-incorporation traveling expenses? So our total allocation for pre 5,200 it is 1,200 plus 4,000, and for post 3,600 and 8,000. So allocation of traveling expenses done. So we allocated traveling expense as per working note, pre-incorporation 5200 and post-incorporation 11600. Okay, so let's go with the next information. Depreciation includes 600 rupees for the asset acquired in the post incorporation. That means remaining depreciation we will allocate on time basis. So working note for allocation of depreciation. Total depreciation they gave you 9600. Out of that 600 for the asset acquired in the post incorporation. So it is directly taken in the post incorporation. Asset acquired in post incorporation, for that we provided difference of 600. So I can say for old asset remaining depreciation, this will be allocated on time ratio. Time ratio is 1:2, so it is divided 3000 and 6000. So depreciation for pre. Okay, so in this way we have divided the depreciation for pre-incorporation 3000 and for post-incorporation 6600. Next, purchase consideration was discharged by company on 30th September. So interest on PC will be calculated up to this date, and this date will be used for dividing the interest on PC. So one more working note. Total interest to vendor 4200. It is from the date of takeover up to the date of payment. Takeover date is 1st April 2000x1. It is paid up to what date? It is paid up to 30th September x1. Pre-incorporation period will be 1st April to 31st of July. And post-incorporation will be 1st August x1 to 30th September x1. Means I will say it is a period of 4 months. Sorry, it is a period of April, May, June, 4 months, and it is a period of 2 months. So your total interest will be allocated in this ratio 4:2, or I can say 2:1. So accordingly interest will be, it is how our interest is allocated in the ratio of this period 4:2. So we allocated interest 2800, 1400. We have considered each and every additional information. Now rest of the things we will take from our P&L account. Salaries will be taken on which ratio? Time ratio. Our time ratio is 1:2, 16,000 and 32,000. So salary is done. Stationery once again on time ratio. Time ratio 1600 and 3200. Time ratio 1:2. Traveling expenses we have done. Advertisement we will take on a sales basis. Your sales ratio is 1:3. 4,000 and 12,000. After advertisement, miscellaneous trade expenses, see students, trade expenses are basically the office expenses. So it will be allocated on time ratio, not on sales. Okay, so it will be taken on time ratio 37,800. One is to two ratio is our time ratio. So we have allocated. Rent we did the working note. Electricity charges we are taking on a time ratio. Time ratio is 1:2. For first part 1400. Second part 2800. Director fees will be taken to post. Bad debts will be allocated on sales ratio. Your sales ratio is 1:3. 800 and 2400. So we have done bad debts. Commission to selling agent will be divided on sales ratio 16,000. Allocated on sales basis 1:3. 4,000 and 12,000. Tax audit fees we will allocate on sales ratio 1:3. Tax audit fees will be taken on sales ratio. Sales ratio is 1:3. 1,500 and 4,500. Next, debenture interest will be taken in post. Interest paid to vendor, we have already considered this. Selling expenses will be taken on sales basis 1:3. $18,900. We have divided in the ratio 1:3. Depreciation we have already considered in our working. Net profit we will derive. So we have to just take a total of the expenses. So student, I calculated a GP, I calculate total expense. If I compare GP with expense, I will get the net profit or loss. So C part. Net profit or loss. So we got profit prior to incorporation 12,800 and post incorporation 74,800. Pre incorporation profit will be taken as a capital reserve. Question has not asked, but we are clarifying. This will be taken as a P&L account balance in our further calculation. Students, you must have understood this solution. Very easy question we have done. Still, if there are any doubts, please get back to me. I will try to solve your queries as early as. Please put in our comment box. And before I close the video, please subscribe to our channel Ekeeda and also press bell icon. Thank you and God bless you.